Hello, and welcome to another MCO market update on FETCH.AI. We're starting here on the daily time frame just to briefly show you the overall larger time frame perspective. For anybody who's new on the channel, what we can say is that the pullback that started in March 2024 might be complete. At least this rally that we've seen here from the April lows is larger than anything we've seen since December 24. So it seems to be something at least that is not part anymore of the direct decline that occurred between 2024 high, the December 24 high and the April 2025 low. So there seems to be a bit of a rally that's unfolding there, and the rally was only in 3 waves so far to the upside, even though it's quite substantial. The market rallied from down there around 34 cents, 35 cents, all the way up to 80 cents. That's a 135% rally. That is quite interesting. The rally, however, is only in 3 waves, which means it could just be a corrective rally. What I'm tracking, though, is a potential, larger corrective rally, but it is part of the 5th wave in this diagonal pattern. I already discussed the overall context here in many videos extensively, so it might turn into a rally that reaches $6.20 plus. Now, don't think this is a done deal or a prediction. It is not a prediction. I'm simply pointing out in a bullish case how it could unfold and how we would get to this ideal target. It is more a mathematical projection, and the fact that we're only moving up in corrective structures should tell you that the structure is extremely fragile. So it will change along the way. The first thing that we need to deal with, the first question, is whether this A wave is actually going to be a 5-wave move or a 3-wave move. And the smaller time frame should give us answers above that, because the smaller time frame will give us relevant micro support levels that we can track and observe, that will tell us, as long as we're holding certain levels, the direct uptrend can stay intact, and if things go well, we form 5 waves up. Why are 5 waves so important? Because it's very simple. A 5-wave move up gives us a series of higher highs and higher lows. Now, we don't have that yet. We only have 3 waves up. It's okay, we have a high, but there was a lower high, right? We have a higher low, okay, a higher high, okay, but I need another higher low and another higher high to really have a sequence of higher highs and higher lows, which indicates the trend is up. That's what's really behind this. And with only 3 waves up, you can't have that. So we need one more high, and then it needs to hold the B wave support that we cannot define yet. I'm showing support levels on the smaller time frame, and they will help us distinguish between one more high, or are we already in the B wave? So let's take a look at the shorter time frame. Unfortunately, FET is just consolidating at the moment, so not much happening at the moment, which I hope you can understand, because the market rallied quite substantially from the April lows to the recent highs from end of April, and now we just need to be patient during this consolidation. Markets cannot only go up, they also need to correct and pull down. Breathing in, breathing out. There is no growth without contraction, so the market needs to correct a little bit before it can continue to go higher. For now, at the moment, this pullback that started to develop end of April looks corrective. It's a 3-wave move down, so it definitely does keep the door open for higher, even more directly in the white scenario, which allows for one more high. Then we get 5 waves up, which would be more clearly bullish. Any break below 55.7 cents, so below this upper support area, will likely take us down lower in yellow wave B. In this case, I would have to assume that the rally from the April low is a 3-wave move, and as a 3-wave rally, it's less clearly bullish. So in the very short term, I'm watching if the market can turn around here in this region, ideally before breaking below 55.7 cents. And if we get 5 waves up, then the next upside level to watch will be 91.8 cents as an ideal target for that 5th wave. But there's currently no evidence that this 5th wave has started. but we are currently holding above a first Fibonacci support level I communicated in a previous video, which is defined at 67 cents. So just waiting to see here if the market can generate a reaction somewhere in this region. That's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.